Hello everyone, welcome to Mastery. It's Rosario's Academy. In this session, we're going to discuss about final accounts. What does it mean by final accounts? Usually, business person who's running the business wants to know about the net result or net state of his business and what exactly the current financial position, current financial status of his business. So with the view, final accounts are prepared at the end of the financial year. After preparing the trial balance, the next step is to prepare the final accounts in order to know the net result or net status and the current financial position of the company. So final accounts are prepared at the end of the financial year by all the organizations. Majorly, final accounts covers two parts. First one is trading and profit and loss account. Then the second part is balance sheet. So trading and profit and loss account and the balance sheet jointly known as final accounts. These two are accounts, and this is not an account, it is a statement. Let us discuss one by one. Let us start with the first part, trading and profit and loss account. At the end of the financial year, these are the two accounts are prepared at the beginning, then based on the P&L, profit and loss account, balance sheet is prepared. Trading and profit and loss account is otherwise called income statement. So, at the end of the financial year, these two accounts are prepared for a particular period. Which is nothing but financial year. After preparing the trial balance is nothing but is the summary format of all the ledger accounts, isn't it? So, all the goods related accounts and nominal accounts are placed at these two accounts. Okay, let us start with the trading account. Trading means what? Trading is nothing but buying and selling of goods. So trading account shows the goods related, buying and selling of goods related accounts. Usually goods are purchased with the view of reselling or with the view of manufacturing, further process. Suppose trading, if it is a trading company, goods are purchased for reselling purpose. If it is a manufacturing company, goods are purchased for further process. Goods are purchased as a raw material for further manufacturing process by the company. So all kind of goods related expenditures are shown at the trading account. Usually nominal accounts are closed at the end of the financial year and nominal accounts ledgers are not carried forward to the next year. So nominal accounts closing balances are placed in these two accounts. Trading and profit and loss account are prepared one after another. So at very first, trading account is prepared. If it is a business manufacturing company, prior to the trading account, manufacturing account is prepared to know the cost of production. So such cost of production values added with the trading account. Then soon after preparing the manufacturing account, trading account is prepared. If it is a trading oriented company, straight away trading account is prepared. Okay, trading account means what? By preparing the trading account, we are able to know the difference between the revenue out of sale and the cost of goods sold. The difference is nothing but gross profits. So by preparing the trading account, we are able to know whether we have arrived gross profit or gross loss. Trading account contains all the goods related accounts, then direct expenditures. What does it mean by direct expenditures? Direct expenditures are the expenditures which are incurred in order to bring the goods from the suppliers to our business premises. Just nothing but carriage, transportation charges, some wages and other factory related expenditure which are directly involved with the goods or manufacture of goods, which are directly involved with our goods. Trading accounts are prepared to know the gross loss, gross profit or gross loss, as we discussed earlier. By finding the gross profit ratio can be known. So that gross profit ratio can be compared with the previous year. If there is any change with the gross profit, then we have to look after the direct expenditures and the sale price of the product. Suppose if the gross profit ratio is lesser than the previous year, then we have to carefully concentrate with the direct expenditures as well as the resale value. We have to revise the resale value, and we have to regulate the direct expenditures. If the direct expenditures are high, then it may affect the gross profit. In the same way, if we haven't fixed the proper appropriate sale price, then that also would affect the gross profit. So cost of goods sold can be identified by adding opening stock plus net purchases, that is purchase minus purchase return. Okay, so opening stock plus net purchases plus direct expenditures less closing stock, because whatever that we have purchased during the financial year, it is not necessary to sell all the purchased goods. Rather, we may kept some goods with us as a stock, so the closing stock should be reduced. So the difference between the revenue out of sale and the cost of goods sold is known as gross profit. Then when it comes to the profit and loss account, which contains all the indirect expenditures and indirect incomes, establishment charges, indirect expenditures are otherwise known as establishment charges, which contains offers and administrative expenditure, other selling and distribution expenditure, and other losses like loss of sale of fixed assets and loss the goods by fire and all. So that should be shown on the profit and loss account. Profit and loss account has the opening balance of gross profit or gross loss value, which has brought from the trading account. That's why soon after preparing the trading account, profit and loss account is prepared to know the net result of the company. By preparing the profit and loss account, we are able to know whether we have arrived net profit or net loss. Profit and loss account carries all the indirect expenditures at the debit side and all the indirect incomes like dividend received, rent received, commission received at the credit side. And finally, we are able to know the net profit or net loss. So after preparing the profit and loss account only, we are able to go for the preparation of balance sheet. Balance sheet is nothing but is a statement. It is not an account unlike these two accounts. So it is a statement which contains all the assets and liabilities. Asset side and liability side value should be equal. Capital plus liabilities is equal to assets. Capital and liabilities places at the left side, and all the assets, that is fixed assets, current assets, all placed at the right side. By preparing the balance sheet, we are able to know the financial status, financial position of the company. And also we are able to get the solvency position, whether we have got the sufficient current assets in order to satisfy the current liabilities. Liabilities is nothing but the claims against our business. Here all the assets and liabilities are grouped and shown as a structured form. With the help of the balance sheet, we are able to prepare so many financial analysis statement like trend analysis, common size, comparative analysis. So preparation of final accounts is the main key area in the financial accounting. So by preparing the final accounts, we are able to get the net result and current financial status position of the company. I hope you must have got some basic idea about final accounts. Thank you so much for watching.